Welcome back, everyone. This is, of course, the Steve Malzberg Show. I'm David Nelson, filling in for Steve. The Justice Department last week launched a major change in strategy against hedge fund firm SAC Capital and their iconic leader, Stevie Cohen. He's often thought of as the poster child of the hedge fund industry. What's different this time is they're actually going after the firm. The last time they were merely going after individuals, and some like myself believe that this could be the last nail in the coffin for SAC. So let's talk to someone who's very good at rooting out what's going on Wall Street. Bethany McLean is a contributing editor to Vanity Fair and also co-author of the iconic book Enron, The Smartest Guys in the Room. Bethany, welcome. Thank you so much for calling in today.
Sure. Thanks for having me on.
Bethany, I'm going to go right for the money shot here. In the end, are we going to see Stevie Cohen do a perp walk?
It is not looking likely right now, and let me back up to explain why that is. The Friday before the Justice Department brought these charges against Steve Cohen's firm, the SEC, Securities and Exchange Commission, brought a civil case against Steve Cohen personally, and they charged him with failure to supervise two employees who have been accused of insider trading. Now, failure to supervise is a pretty weak charge. What that basically means is that the civil authorities did not have enough ammunition to bring an insider trading case against Steve Cohen. The burden of proof in civil cases is lower than it is in criminal cases. So if the civil authorities didn't have enough evidence to bring an insider trading case directly against Steve Cohen, then the criminal authorities definitely didn't. And so that's why you saw the Justice Department bring charges against Cohen's firm rather than Cohen personally.
Well, I have to admit, Stevie didn't look too worried this weekend. He apparently had a party, threw a very big party in a $60 million estate out in East Hampton. I think one store owner said he bought $2,000 worth of tuna. That sounds like Stevie, but isn't there a change in the case now that we have a rollover of Richard Lee?
You know, and that is the caveat to all of this, is that there are a couple people, not so much Richard Lee, because if he had anything that could implicate Cohen directly, then I think he would have done it, and you would have seen a different set of charges brought. But there are two people who at least theoretically could implicate Cohen. One is Matt Martoma, who is charged and awaiting trial this fall, and another is a very close lieutenant of Steve Cohen's named Mike Steinberg, who's also been charged. Right now, both of those guys are pleading not guilty. Were they to change their pleas and flip on Cohen, assuming they could, assuming they have anything on him, then you could see this case change in an instant.
Some are projecting that we might start to see a brain drain from SAC as one by one some of their top people maybe decide that it's maybe time to get out of the firm. And I would think, large institutions who might have money placed with SAC, the publicity is very damaging. At some point, you got to stay out of the limelight and you've got to pull your capital. Isn't there going to be a capital run on the firm?
Well, most institutions have already pulled their money. I think the SAC is down some $5 billion in capital so far this year, and I would think that other investors are going to have to pull theirs for exactly the reasons that you mentioned, but most of the money in SAC is Cohen's own fortune. So there will not be a capital run on the firm because most of the money is his. And secondly, SAC invests in highly liquid stocks, so this is not a highly leveraged hedge fund that's invested in long-dated illiquid instruments. This is a moderately leveraged hedge fund that could sell its investments tomorrow because they're all stocks. So I don't think you're going to see a run on the bank.
I'm sure investor capital is safe. They trade in very liquid securities, as you pointed out in the past. But how important is this email we hear so much about? Apparently there was an email that went to at least one of his portfolio managers. It was proprietary information, perhaps even insider information. And the question is whether or not Stevie Cohen himself actually read this email. At some point in time, isn't it likely somebody's going to come out of this firm and say, yeah, I showed it to him?
Well, you would think so, and that's the interesting, I guess, gap is the right way to put it in this case, is that the Justice Department alleges that the insider trading at SAC was pervasive and on an unprecedented scale in the industry. So if that were the case, you'd think there would be multiple people at SAC who could come forward and say the guy is guilty. But you haven't seen any of them yet. So does that mean that there is no insider trading at SAC and that the Justice Department has overreached? Does that mean that the people who work there have made a ton of money because they've worked there and they're incredibly loyal to Cohen and they know where their bread is buttered? Or does that mean everything could change in an instant? And so there's still lots of scenarios that could play out.
I guess this is going to play out for some time. I want to take you for a moment to an article that you wrote just the other day, and I picked this up off of Reuters. And one thing you wrote that really struck me, the notion that individual investors could compete with big institutions in the stock market. Is that really a folly? Is that really, out of the question?
Well, it's not whether it's out of the question that you can compete or not, but it is out of the question. There's no question it's not a level playing field. And I get a little bit annoyed when I hear authorities bringing insider trading charges and saying we want to make the playing field level for everybody. It's not level. It never has been, and it never will be. And I personally think it's somewhat of a crime, and I use that word in the moral sense, not in the legalistic sense, to pretend that there is a level playing field. When you look at the access to information that institutional investors and particularly hedge funds have, and you think about the amount of time that smart people are spending trying to ferret out detailed bits of information, it's not a level playing field. And you think about the way information travels within these very small contained circles where everybody who's friendly at a certain level will know that there are rumors that such and such company is a fraud.
But Bethany, don't we have to protect against? I understand that it's not a level playing field, and nor should it be. These traders,
I'm not arguing
and these traders and these money managers put in a tremendous amount of time studying their craft, and they're very good. But we have to draw the line somewhere, and I would think insider trading is a place we've got to really draw a line firmly in the sand.
I'm not saying there shouldn't be a line drawn. You can't have a whole theoretical argument about insider trading and what the damage is. I happen to believe it's against the law, and yes, we should draw a line somewhere. And some of the cases that the government have brought to me and to other people in the industry are just clearly, if insider trading it can be a gray, murky area, these cases are clearly in the black. They clearly are insider trading. And so I'm not arguing against having brought these cases. I'm just arguing don't think it makes the playing field level.
I couldn't agree more, Bethany. Bethany, thank you so much for being with us. It's a pleasure.
Thank you.